If you owe more than you expected, you still have options. Today, we walk through every IRS payment solution from best to worst so you know exactly what to do.
Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal, hosted by Anastasia, Myiesha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy, we decode everything it takes to run a thriving, creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Hi, guys. Welcome back to another episode. I'm Maisha.
And I am Anastasia. I'm a CPA and an enrolled agent.
I don't have any of those letters behind my name.
Yeah.
Oh, I'm BFF of the enrolled agent as
So, what are we talking about today?
Today, we are talking about what if you can't pay the taxes you owe,
right?
And what to do.
Yeah. So, we've talked a lot about owing taxes and paying taxes, but what happens if you don't actually have any money, and kind of what steps you should be taking in those scenarios. So, I mean, we kind of come across it a lot, especially if you are in that growth period, because you might have earned money last year, but between January and April, you've been reinvesting in your company, or sometimes, you know, especially in some industries, there's not a lot happening in January through March. So then you're kind of using those last few payments that you got and in November, December to kind of get you to that next spot. Or maybe you just owe a whole bunch of money and you didn't even realize it because, I mean, especially when you are a sole proprietor or a single member LLC and you're filing a Schedule C inside your personal tax return. I mean, sometimes the tax rate can jump up to like 50% of what your income is because you have to pay Social Security and Medicare. And especially the first go around. I mean, everybody remembers their first paycheck when you earn money, and then the amount that gets deposited into your bank account is much less. But it's a little bit weird when people are giving you that full amount, and then you have to make sure that you're saving it because you have to pay both the employee portion and the employer portion. So you kind of have to save for double what you were paying when you were a W-2 employee. So sometimes that can always be a little bit of a surprise. And like I said, sometimes there's just like seasonality issues, or, you know, if you aren't on a monthly retainer, then you're constantly having to find your next client. So sometimes it can be a little bit tricky because a lot of places, they just shut down in December. So like if they're shut down in December, you can't sign contracts to like get to work in January. They're all back at work, getting caught up. Then you have to talk to them and do all of this stuff. So then you're signing contracts in like February for something that's going to happen in April and all of that kind of fun stuff. So, so there are a lot of different cases where maybe you just don't have any money. And I guess my thing would be still file your taxes.
Yeah, that's fair.
Still file that piece of paper because there are certain things that there's time clocks, you know? So sometimes there's things for like filing the piece of paper late, and, you know, so there's additional penalties that can start to apply if you're not filing the return and the piece of paper at all, whether or not you include the payment. But also there's like different statute of limitations.
Gotcha.
And if you don't file, then that statute doesn't start. So sometimes making sure that you are filing, and obviously, you know, there's nuanced scenarios and all of that, but for, you know, like a normal freelance person that is, you know, has a sole proprietorship, I would say even if you don't have the money, still file the tax return, or, you know, and still get everything together, you know, and kind of work through that. So there are programs that are specifically created when you don't have the money to actually pay.
Gotcha.
So, and again, it's not, you know, obviously everybody wants to make sure that everything is taken care of and blah, blah, blah. But it's not inherently good or bad to, like go on one of these payment plans. Like I certainly don't care, and government is just going to want to make sure that you are actively paying towards it if it is an actually, a true tax liability. So, and you have to remember, even if you don't file your tax return, they can file your tax return for you.
They can? Mm-hmm. Oh, okay.
Yeah, it's called like an SFR. So they can file a tax return for you because, like I've said, they get the wage and income transcript, which is the copy of all of the documents that you're receiving. The IRS receives a copy. Oh. And then so they know all of the forms that you received. So they'll just file something. But of course, they only know your income. Mm-hmm. They don't know your expenses, so they're just going to send you a bill for all of the 1099s that you received, and it's going to be this massive number. And then if you ignore it, then they could put a lien on different things or do a garnishment on your paycheck and things like that. And in a lot of cases, once the IRS says something, they're sending all of that information to the state. So now you've got the state asking for different things.
Where is it?
Right. So if you have that 1099, being able to file means you are able to claim all of your expenses and you're getting to that true number. And then also, we see people, come back like 5 years later, it's much harder to get their documentation for all of their expenses and get everything together. So the longer you wait, normally the fewer things you can deduct because you no longer remember and you don't have the information available, yes, you can use your oil changes to show how much your mileage was at the time, but if you sold the car, then, and normally if you don't file taxes, you're probably not keeping all of your so that's why I say, making sure that you're filing, you're collecting all of the information when it's fresh in your mind. And then that way, both you and the government are aware of what your true tax liability is. Then you can kind of start moving towards some of these other options.
Gotcha. Okay. So step 1, file your return while it's still fresh. Got it. Okay. So then what are your options once you filed and now you have this lump sum that you need to pay and how to pay it or how to make a way of paying it?
Yep. So there's a couple of different ways that you can do it. And a lot of times it depends on how quickly you are going to pay off that balance.
Oh, okay.
So, there is a procedure where, basically you call into the IRS and you say, hey, I need a little bit more time. And they will kind of put a pause on your account so they won't send you collection notices and notice to levy and all of that fun stuff for, about 6-ish months. And then you just pay within that time period, so you can kind of like agree with the, representative. They'll pause your account for that certain time period. And sometimes it can be, different time periods depending on the situation and what have you. But if you are planning on paying it relatively quickly, most of the time I recommend just doing that because it's just a phone call and you're saying, hey, can you, I know I owe, I owe, let's just, just hold on one moment. And the benefit to that is it's a free call to doing that. If you do need to take longer to pay, you can get an installment plan.
Okay.
And so the installment plan, the reason why I don't say jump right into the installment plan is because it does cost you money to get onto the plan. So you're paying
is it like
them
a fee? Oh, okay. Okay.
Yeah, like an origination fee. So it could be like $150 to get onto the installment plan. So if you, get onto the installment plan, but you're going to pay them in 4 months, then you're paying them an extra couple $100 when you could have just done a free phone call with them. So, just really looking at your cash flow and when can you reasonably pay this balance. And if you do need a little bit of extra time, then the installment plan is available to you. In most cases, they'll allow you to go out like 72 months, and and the states will as well. Everybody's going to have, different time frames, some at 36 or 60 or what have you. So, just making sure that you're aware of the time frame that you need to pay everything by. But and even then, let's say you have to pay everything within 60 months, but it's a really large tax bill and you just don't have the money to be able to do that. They are still willing to help you, even though it's kind of below the amount that they would request that you pay. So there is, a little bit, because you have to remember interest is still always going to accrue. So not only do you have to think about what your current balance is, but you do need to add additional to your monthly payment plan so that you're covering the interest that's going to be charged as you're paying this off.
Gotcha. Okay.
So, and like I said, I've had, you can, for the installment plan, you could just go onto irs.gov and fill out the information and request it. Or if you know that you're not going to have the information, you can fill out the paperwork as you're filing the return. And so you sign your return, you sign the request for the installment plan, and then you kind of just wait. And they'll send you a letter and let you know whether or not
you're like snail mail. Okay.
Right.
Yeah.
Because the IRS will always send you a letter. They don't call, they'll send you a letter. So sometimes it can take a little while to get on the installment plan. And normally if you want to get on that installment plan as quickly as possible, including that form when you're sending your tax return is going to be the easiest way. Because if you file your tax return, and then, you get the e-file confirmation from your tax preparer, which you should always request, because the IRS loses things, and you call them the next day and you say, hey, I want to get on an installment plan for my bill. The IRS is going to say, well, what bill? Because we haven't we've accepted it, but we haven't necessarily completely processed the return. So then there's no balance for us to create an installment plan for.
Gotcha.
So normally the alternative is to wait, file your return, wait until they mail you a letter saying what your current balance is, and then you can go and you can request the installment plan, again, by form. You can call them on the phone. You can fill it out on irs.gov and, just kind of get it sorted that way.
Okay,
Yep.
cool.
Yep.
So you can do a free payment plan if you're planning on paying within 6 months, right? And then that's just a call in. So then you're not having to pay any originating fee. Or if it's going to take you longer, do the originating fee, do the installment plan. But if you know in advance, do it with your tax return because it'll be a lot faster to do it.
And technically, when you request an installment plan, you are also signing a little portion that says, like, from this point forward, I am going to be current on my taxes.
Oh, yeah.
So, sometimes what happens is if you are on an installment plan and then you don't pay the next year's taxes too, it can kick you off of that installment plan, and then you have to call them again and get on a new installment plan, pay them again, the fees to get it all wrapped up into one. And then your monthly bill is going to be higher and all of that fun stuff.
Yeah.
Yep. And normally we want to do it, if it's under $50,000, it's normally relatively simple to do, like I said, over that, again, there's always a pathway to kind of do other things, but sometimes they'll request additional information if you owe them, maybe $1 million instead of $20,000. It's going to be a slightly different process.
Yeah.
just a teeny bit.
So with like how big you could owe the IRS and whatnot, is there like a typical, like how do they calculate the monthly payment? They
just kind of take the balance owed and then they divide it by the
number of months that they have. Okay. And then you just have to look at what the interest rate is. And then does that also change all the time too?
Yes.
Like the interest that's like, because the interest is, that's fine. So it's not like locked in like a mortgage or anything like that. Like it can fluctuate.
But that's why, I say I normally say, you know, on your monthly payment, depending on how long it is, maybe add another $10, add another $15. And still too, you know, it benefits you to pay a little bit more than the minimum amount, because then you're paying it off faster, which also means you're paying less in interest. So.
Gotcha. Okay, cool. Are there any other like things that people can do in order to pay, or?
I mean, I normally say, you know, also, if you are in a scenario where you just absolutely cannot pay, you know, your income has completely shifted, you know, so sometimes that happens, you know, maybe you get hurt on the job and you go on disability, or maybe you become a caretaker for a family member or something. And so your income has drastically changed and there's really no way for you to pay this. Then they also have the offer and compromise, where you can kind of come forward to the IRS and request that they accept a lower amount than what you actually owe.
Oh, okay.
But it's a little bit harder for that, because normally the IRS has about 10 years to collect from you. So sometimes they'll say, no, we'll just wait a minute, you know, because they're still getting their interest.
Gotcha.
And if you don't pay them, they take your passport.
So you can't leave. Okay.
You can't leave the country.
Okay.
So they'll take your passport, they'll garnish your wages. They can't take your primary residence, but if you have any secondary homes, you know, so there's other ways for them to get to, you know, different assets and kind of force you to make some of these payments.
Gotcha.
You know, I mean, obviously there's always different methods and strategies and what have you. So that's why it's really good to, you know, especially if you have a larger balance, to make sure that you're talking with a tax professional so you know everything that's available to you. But yeah, when it comes to the offer and compromise, if you are able to show that you really just don't have any way of making that payment, and it's not going to change within, you know, the collection statute of limitations, then they're a little bit more available to or amenable to accepting just a lump sum payment instead of the full balance.
Gotcha.
So, you know, that's why I always say, like, there is always a pathway available to you. You know, some of them might not be as fun as others, but there is a pathway for a lot of these cases.
Gotcha.
So,
Okay.
and then also, too, don't forget that you have the penalty abatement that you can use. So, I mean, sometimes we can see penalties that are in like the $3,000-$4,000 range. So, you know, if you're able to request that penalty abatement and knock off a huge chunk of it, then, you know, like maybe that can be an affordable payment that you can pay in the next couple of months, or get on an installment plan that would be affordable for you and your family.
Gotcha. Okay, cool. So, what is like the easiest way for a person to like save for taxes? Like, is there a good method to use, or
Yeah. So, I mean, that's where a lot of the recommendation would be to save, you know, 35% of your earnings in a savings account and just have that set aside. You know, obviously you still need to make your quarterly estimated payments, but it is kind of a way where you are creating your own tax refund. And I generally recommend even over saving a little bit. You know, so really it's, you know, it's going to be like 35% of what your net profit is.
Yeah.
But, you know, sometimes you don't always necessarily know that if your bookkeeping isn't up to date and what have you. So, you know, even just taking 30% of your top line earnings, you know, so your gross income, that's the cash that you receive from the clients before you take out your expenses. Just take 30% of that, throw it into, you know, ideally like a high yield savings account or something. And then that way you can kind of pull from that for your quarterly estimated payments. And then also that if you're over saving, it creates your retirement. contributions.
Oh yeah.
So
forgot about those things.
Yeah. So, really what I like to do is just make sure that you're, number one, taking advantage of all of the tax opportunities that are available to you, but also making sure that within that we are planning for your future. So taking, 30% of the top line gross income and then setting that aside
as a do not touch account.
Right. Exactly. And then having that, as kind of your nest egg. And I normally say too, if it is incredibly difficult for that to happen, I mean, normally those are situations where we have a lot of expenses that we're able to kind of take into account. But it's just making sure that you're not letting your personal lifestyle like kind of creep into some of those business funds and things like that. But yeah, just saving. And then you're creating your own tax refund, because tax refunds, like, it's not free money. It was your money originally that you accidentally gave them, that they're returning.
We don't get interest on that, but they charge us interest on the money we owe them.
They do.
Do they give you? Oh, okay.
They do. So when you file, you have to request your money. Number one.
Okay.
So they will not just hand you your money back. You have to request your money.
Okay.
And if they don't give you your refund within a certain time frame, then they will give you interest.
Oh, I did not know that. Okay, so there is something there. So,
So
you were
if they
talking about the
are
interest that they
delayed
accrue, and I
and
was
things
like,
like
do
that.
we get interest for this? Yeah. Oh, okay.
Yeah, but that's, I mean, even if you have a W-2, the IRS sees that you have a W-2. They know if you have kids and all of that fun stuff. So sometimes they know that they owe you money, but they're not going to say anything about it. And you have a time clock to request that money back. So you only have 3 years. After 3 years, if you haven't filed your return, even if you have a refund, they won't give you the money back.
Okay.
Yeah.
So filing your return is very important.
Yes.
Okay.
Yes.
So for a listener at home that owes some money, what should their, like, to the IRS, like they owe a balance, they know this, what should their first call really be?
I mean, really to a tax accountant to create a strategy around, resolving the situation. Sometimes it's, like a USTCP or, somebody that is really experienced in tax resolution, depending on the severity of the situation.
Yeah.
But, just kind of coming up with a plan, because I tell people all the time, like, I'm not part of the IRS. So it's not like I don't go and tell them everything, I mean, I can be subpoenaed, so don't tell me too much. But, I'm not going to go running to the IRS. And even if, it's always good to at least prepare the returns, because you can pay me, I'll prepare the returns. We can see what the damage is and then start making plans around that, versus it being like this black hole that's constantly chasing you that you don't necessarily know what you're going to do about that. So let's make it so that you can sleep at night. Let's get all of this stuff prepared, see what you actually owe. Ask the IRS to stop sending you letters, because we're taking care of it, and everything. And then let's come up with a game plan for how we can kind of get this resolved, get you on a good pathway kind of moving forward, so that it doesn't happen again. But I mean, I tell people it always happens to somebody once, so you are in very good company if you, have one of these kind of tax situations occur. But a lot of it is just making sure that you're getting support from the very beginning and knowing, like, we see it all the time. And I tell people, whatever situation you're in, probably have at least one person who's worse than you. So by now there's not a lot that we see that is a surprise. And that's really what we're here for, is to help come up with a solution to make sure that everybody is happy and that at the end of the day, you're able to achieve your goals, because like I said, They will start taking things. They will prevent you from leaving the country. They will do all of these things. So, we want to make sure that we are acting on it within a reasonable time frame so that you can start preparing for it moving forward. So I know it all sounds very scary, but
it doesn't have to be.
Right. Exactly. Exactly. It doesn't have to be.
Sometimes the thing to take away scary is just have a good game plan. Like, this is how I take care of it.
I was just filing a tax return for somebody they haven't filed for a couple of years and they get a refund.
Oh, nice. Yeah.
I know. So he's, okay, cool. Now I don't have to worry about going to jail and I can buy Christmas presents, So it doesn't always have to be bad news. And that's what a tax professional will help kind of walk you through.
Yeah.
And help you, kind of overcome any kind of anxiety that you have in the situation and really, okay, let's figure out what's actually happening here and what steps we need to take and kind of go from there. So
I like it.
Yeah.
All right.
So even if you don't have any money, still talk to your tax person. And if you have any questions or concerns, just feel free, put a comment below or send us an email and we are happy to talk about your particular situation.
Bye, guys.
That's a wrap on Let's Get Fiscal. Ready to stop guessing and start saving? Click the link in the show notes, grab your consult, and let's make your business work for you, not the other way around. You've got this.